Australia is very vulnerable to a prolonged conflict in Iran and the Middle East. The reason being is really our vulnerability is our lack of stockpiles. And why is that important? Well, if we just measure petrol and diesel, which are the two fuels that we consume the most here in Australia, we've only got about 25 days left. That's based on government statistics, and the last of those was for the end of December. So what they are as of today, I don't know, but it'd be somewhere in that ballpark. Nevertheless, that's not a long period of time. And so we are vulnerable. It makes us vulnerable to price rises, and what we've seen with the wholesale price, that's the international price of oil. We've seen that rise 20% over the past week.
Yeah, it's definitely hitting us here in a very vulnerable position, as you say. We also know with the wider impacts being felt, but Kuwait has cut oil production. Tell us about that.
Yeah, with Kuwait and what we see with other oil producers is because the Straits of Hormuz is shut. Well, rather, Iran is threatened to blow up any ships that go through there, except its own. That they don't have the storage capacity to keep on producing. So because the shipping is being constrained, that if they keep producing, they've got to store that production somewhere, and they're running out of storage capacity themselves. So that's what's limiting their ability to produce further oil.
And the war is pushing up gas prices.
Yeah, that's so we've got a couple of key areas that Australia is very vulnerable. So as I mentioned, petrol, diesel, but also gas. Fortunately, local gas prices haven't risen. But what we've got to consider, particularly here on the East Coast, is that the domestic gas price here on the East Coast is quite linked to the Asian gas price, and that's mainly measured in the LNG because. Not only is the Strait of Hormuz important for oil supplies, but it's also very important for gas supplies because we've got one of the world's biggest producers there, Qatar. Both Qatar and the UAE, between them, that they account for about 20% of global LNG supplies. And so if that's cut off, that's had a big. Most of that gas flows to Asia, and so what we've seen both in Asia as well as in Europe, we've seen a very strong rise in the gas price, actually far stronger than what we've seen in the oil price.
So, this is not a short blip, as many had hoped it was going to be. Do you think people and markets are really factoring that in at this point?
I think they're starting to. I think what we've seen over the past week is in the first day or so, it happened last weekend, and I think markets were expecting, because what we saw in the reaction in the oil price was quite a modest rise. They thought that maybe we're looking at another quick solution like what we saw in Venezuela in January, but actually what it's sort of turning out to be, it could be a far longer conflict. And so that's starting to be factored into prices. So with the oil price, for instance, that's now over $90 a barrel. That's the first time it's been up there in about 2 years. And it actually, if we measure back from the beginning of the year, before the Venezuelan event, so we've seen an almost 50% rise in the oil price. That will flow through to Australian prices because we import about 80% of our transport fuel needs. So that's everything. And so we are very vulnerable to the international flow of oil.
Finally, Kevin, as this conflict continues in the Middle East, Russia is benefiting from it. Tell us about that.
Yeah, what's happened in the past couple of days, I mean, if we wind the clock back a few weeks, the US told India that it didn't want it to buy any more oil from Russia because both India and China, which are both big oil importers, they were the biggest buyers of Russian oil. So these sanctions haven't impacted China, because I think China would probably ignore them anyway. But with India, the US told India, look, you can't buy any more Russian oil. But that's now been reprieved until April the 4th. What the US has said in their rationale for that decision is that it would only affect the oil that's actually on the water at the moment, that's in transportation, in order to not disrupt global oil supplies.